Let's bring in Ed Yardeni, president of Yardeni Research. Ed, it's great to have you. I know you've written in the last few weeks about maybe the risk of a market melt-up returning. Where's your head on that right now, and how do some of these data points feed into it?
You know, at this point, my base case is we have a fairly leisurely bull market. I have been targeting 5,400 by year end, and we're awfully close to that already, but I'm not going to change that. I think that, we could stall out here a little bit, but all in all, things look pretty upbeat. I mean, the numbers this morning I thought were great. PPI was revised down, as Leslie pointed out. There was an outlier there in portfolio management fees. I guess Wall Street's greedy here. You know, the bull market's up and they're charging higher fees. But other than that, the PPI numbers are fully consistent with the CPI inflation rate continue to moderate towards 2% by the end of the year. And Carl, one more thing, the National Federation of Independent Businesses, the small businesses say they still got plenty of job openings. They just can't find people.
And I know, too, I mean, as some have worried about certain elements of the U.S. consumer cracking, you keep returning to this theme of the generational wealth that has been built up primarily among the boomers. And with some of their responsibilities now in the past, do you think they're going to spend it all?
Well, I've got an inside track on that. I'm a baby boomer. And I'm certainly helping out. I've got 5 kids. I don't know how that happened, but yes, I do. But anyways, the reality is I see myself and my friends helping their kids. There's a lot of kids still living at home. Even if they get a job, they're not getting paid enough to afford rent. So we're seeing a lot of generational transfer. And meanwhile, the baby boomers are having a blast. The ones that are retiring have no mortgages, have no tuition to pay. They're traveling, they're going out to eat, they're checking up with the doctor every now and then just to make sure they can climb Mount Machu Picchu.
Ooh, I was in Machu Picchu recently as well. Ed, speaking of, I don't even know how to transition. Let me just go to the budget deficit, because I know it's something you've been focused on as well. Yeah. We'll talk about it now. We'll talk about it at some point in the near future. Are we ever going to get to that day of reckoning where interest costs simply become such a burden as a result of higher rates that it really does force politicians to do something about these structural deficits?
I think we're certainly on an unsustainable path. Everybody seems to describe it that way, and I agree with that. The scariest thing right now, of course, is the way interest payments are going. As you said, they're up to over $800 billion. Within a month or two, they'll be bigger than defense spending on a 12-month basis. And by year end, we're probably going to be spending $1 trillion just on paying the interest. So the government's going to be borrowing to pay interest. That's not a wholesome development for anybody in a financial situation like that. So the short answer is we're probably going to need down the road some sort of debt crisis that wakes up the politicians, because it is a problem that was created by politicians. It's a problem that can be solved by politicians. It's real simple. You just have to cut back on outlays and increase revenues. But there's no constituency for that at all at this point.
What would ultimately kind of garner that support from politicians? Would it take some sort of severe volatility, maybe even a crisis in the Treasury market, in order for them to really kind of sit up and pay attention?
Well, I think we had a glimpse of what could happen back last year during August and September and October. We had the bond yield just zoom up from 4.25% to 5% in a heartbeat. And that was largely because some auctions didn't go very well. So I'm watching the auctions very, very carefully. And if these auctions start to get real sloppy, it would indicate that the bond yield could really move higher. So it's my old friends, the bond vigilantes. They kind of backed off when we got to 5%, and now we're like 4.5%. But we're not out of the woods in that regards. The good news is inflation's moderating, the economy's growing. And so the fundamentals of the economy suggest that the day of reckoning is down the road. It's not imminent.